Hey folks, how you doing? Welcome to the video. It's Sunday, June the 14th, 2020. Let's do a little Sunday video recap here. So generally, the first part of the video, I'm going to be talking about my trades for the week. And then in the later part of the video, I will do some technical analysis on the broad indices, NASDAQ, S&Ps, Russell, and the big tech names, because that's generally what I look at here. So this week was a red week for me, but it brought my attention to some very important things in regards to my trading. So if you've been watching my videos, you've seen that I've been making a lot of realizations about options trading and about derivatives trading in general, and how I'll be adapting my trading going forward. So generally, I'm going to be focusing on a very specific niche system that I'm trading right now, which is a form of scalp trading. And the way I'm going to be executing this is probably with the NQ futures, MNQ, the micro NASDAQ. I'm going to be looking for low risk, high reward opportunities that fit within my criteria. Generally, when I take a trade, there's 4 variables I look for. I'll share with you those 4 variables right now. So number 1 is the trend of the market on whatever time frame I'm trading. And for me, the most important time frames for intraday are after I understand the hourly and daily levels, then it goes to the 15-minute, 5-minute, and then all the way down to the 30-second chart to really fine-tune those entries. So the first variable is the trend. Second variable is going to be my exponential moving averages here, because I've noticed that the market respects them quite well. And if you can identify a pattern where the market is respecting those exponential moving averages, then you can help yourself set up high probability trading scenarios. Okay, now these last 2 variables here are going to be the important ones. So the third variable is when the market attempts 2 times or more to do something. The reason that's significant is simply because when the market attempts twice to do something and fails, generally it tries the opposite, all right? And obviously it can be even more, like if the market tries 3 times to do something, then it will increase the probability that it tries to do something else. But for me, 2 attempts is generally enough. And again, it depends on the time frame you're trading. If the market is into a key inflection area, then 2 attempts is enough. But if the market's kind of in a chop range, then I'll probably go for the 3 attempts. All right, so that's going to be the third variable, 2 attempts and a failure. And the final variable in my trading setup is basically when the market will break out of a price range or make an impulsive move and then follow up by regaining the price range that it broke out of. So for example, if we see a higher high breakout, no follow through back into the trading range, that for me fits the criteria of a failure. And that combined with the fact that 2 attempts or more and a failure is enough for me to enter a trade, okay? So I just shared with you the 4 variables right now that I'm using to trade basically. Now in regards to my trading this week, I ended the week red. If I show you the profit and loss statement, I think I had traded about 16 different options contracts and only 4 of them ended up with a net profit, right? So the rest of them ended up with net small losses per contract, some of them bigger, some of them smaller. And there's a couple of interesting things to be gained from this, because I go in depth and analyze my win rate, win to loss ratio, how many trades were winners, how many trades were losers, and then I go back and obviously look at the net profitability of every single trade that happened. So from my analysis here, in terms of a win to loss ratio, I'm a little bit under this week with 8 wins and 12 losses. But if you look at the profit and loss statement, you'll see that I was only a net profit on 4 out of 16 different options contracts. So you can see that that's quite bad, of course. Now, one other thing that I noticed, one other thing that I had realized is that the majority of the trades I entered, now I'm going to say a solid 80% because I went back and looked at all my trade reviews for the week. A solid 80 to 85% of the trades I took, I had initial profits in the trade before having a loss. So that tells me that my trades are fine. There's nothing wrong with the trades I'm taking. But what there is something wrong with is how I decide to manage them. So when a trade goes a few ticks in profit, at that point, it's gonna be up to you to put in your break-even stop or to bring your stop up to break-even, okay? Because in the environment where you're scalping the markets, you wanna be in a trade where you're right almost as soon as you get in the trade. You're initially right in the direction of the market. You don't wanna be sitting around being right for a bit and then you're wrong and then you're in a loss. So that's kind of the approach that I'm thinking about right now. And again, what I realized this week is the fact that a lot of the trades I'm taking, I have initial profits on, but again, it won't go and hit my profit target right away. It might give me like half of my profit target and then come back to my break even. So I honestly think that if the market does that, you should just get out. You should just take your break even and get out. So, and this is why I'm likely going to be switching to futures going forward, simply because the futures market is more liquid than options and there's less manipulation in terms of options, supply and demand stuff. It's just a better market to trade more precisely, right? So if I have a 10-point stop in the NQ, I have a 10-point stop. That's it. There's nothing that's going to affect the position other than the directional move of the market. Whereas with an options contract, for example, if the market suddenly starts losing volatility, then you might lose a couple of dollars of premium when the market is doing nothing, even if you're in profit theoretically from a directional standpoint, okay? So this is generally why I'm thinking about switching to futures for directional scalping, that is, because there's too many complications that arise with options contract. Not that I'm saying I'm going to stop trading options, because I have a lot of knowledge when it comes to trading options, but I'm definitely going to change my approach to options and try and focus on the edge in trading options, which is of course profiting from mispriced options and the fluctuations of implied volatility in the market, okay? So that's generally it. So again, from a win to loss standpoint, 8 wins, 12 losses. But again, if you count the net profitability of each contract, it's more like 16 losses and 4 wins, something like that. And going back and looking at the trades, there were clear occurrences where I entered the trade and I was in profit, and then for some reason, I ended the trade in a loss after, because I let the trade go back to break even, or something happened where the market was in a trading range, and then by the time the market came back to my profit target, the contract was barely at my break-even point. And this happens very often with options contracts, guys. You need to know this. So for the next part of the video, we're going to be doing some technical analysis on the broad indexes and some of my favorite large cap stocks here. Okay, so let's take a look at the NASDAQ daily chart. We're still respecting the 26-period exponential moving average on the daily chart. So as long as that is support, then the bulls are in full control, in my opinion, okay? Anything above 91.7250 is a daily high or low at this point. If you look at the weekly chart, you can see that we broke to a higher high and we actually closed somewhere near our previous all-time high on this NQ chart. So if we lose that daily uptrend, market's likely going to pull back for some sort of a weekly high or low to meet up with these exponentials on the weekly chart. But again, as long as these stay as support on the daily chart, then bulls are in full control. Let's take a look at the ES. ES and the Russell are very similar in the sense that they're just a bit weaker than the NASDAQ. All right, so there's a couple levels that stand out here on the daily chart. So you can see right here, it looks like a little bit of a daily high or low that had formed right at 29.92. So if we stay above 29.92, the bulls remain in full control. If we lose that and continue this hourly downtrend, then we're looking all the way down at 2903. So anything above these two levels is a daily high or low, keeping the bulls in full control. Weekly chart, you can see that if we lose those daily high or lows, then it looks like we'll be consolidating for a weekly high or low at this point. Now again, if you zoom out and look at the monthly chart on the S&Ps, it looks pretty clear that we're in some sort of a longer term trading range. So it makes sense that we could continue in a sort of a trading range going forward and potentially stay in this throughout the summer. All it takes is for you to look at the last 10 years in the S&Ps here, and you can see that the more likely scenario here seems to be some sort of a longer term trading range. So I don't think we're in an investor's market right now. It looks like we're in a trader's market. Looking at the Russell, you can see we're a little bit weaker than the S&Ps, but we're still in a weekly and a daily uptrend. Look at the daily chart. Well, we broke below the daily high or low of 1368. If we stay above that next week, then consider us still in a daily uptrend. Because if we lose that level, then we're looking all the way back down to 1297 or so. So we got some supports down here, and we'll see how the market reacts around those levels. So daily uptrend still intact for the bulls here. As long as the bulls keep this daily uptrend, we're in full control. Let's look at our big tech names here. Apple in the weekly chart looks similar to the NASDAQ, all-time highs. A little bit of an upper wick there, profit taking, no red flags. You can see that our daily exponential moving averages are still holding the price as support here. If we close below the 12 exponential, then we could say that daily consolidation is underway. And anything above 313 all the way down to 310.30 would be a daily high or low. So the bulls have plenty of space to work with there, and we'll see what happens going forward next week. Microsoft, all-time highs as well. Previous all-time high was 190.70. You can see that we had some profit taking at the end of last week here, closing in the high 180s. Weekly chart, nice upper wick there. We'll see if we can continue this consolidation or not. Now again, when you look at a weekly chart like that, you can see that that upper wick suggests that we could see more profit taking. But remember, whatever looks more obvious on the chart tends to fail. So again, look at that daily chart. You can see how we're holding these higher lows here. And as long as we hold these exponential moving averages as support, then the bulls remain in full control. Amazon, similar chart, a little bit stronger than the Microsoft. Again, with a huge upper wick of profit taking. Don't be deceived by that, of course, because you can see that we're still in a daily uptrend. Anything above 2437 is a daily higher low. If we lose that, we're looking all the way down to 2330. Uptrend still intact. Monthly time frame, bulls in full control, although a little bit extended. Let's keep moving on just for fun. Tesla, weekly chart. Nice upper wick of profit taking. You can see there's a lot of correlation here in our broad market. Now, Tesla is not supposed to be a big piece of the NASDAQ, although you can see that it has a lot of correlation to the index and to the large tech names. So even if it doesn't have that big weighting in the actual NASDAQ, it looks like it seems to be correlating quite a bit to the S&P 500 and to the NASDAQ. Looking at Tesla, daily uptrend. We broke above this trading range that we were in for a while here. And now we can watch how the price is reacting when we head back into this 870 area. And that is pretty much where our exponential moving averages are going to be also. So you could say that we're consolidating for a daily higher low at this point. And we'll see if the Tesla bulls can hold a daily higher low and potentially see another higher high above 1,000. Or if this is just going to be a massive FOMO fake out move and we will go down from here. So who knows? We'll just trade what the tape says and what the price action says. That's something we noticed last week, is how that broad market correlation has been coming back versus seeing that rotation that we were seeing. So the previous 2 or 3 weeks or so, we saw a lot of rotation between the healthcare sector, financial sector, and the tech sector, keeping the S&P 500 relatively strong. At the end of last week, we actually saw the market start to regain some of that correlation that we were seeing during the Corona dump. Generally, when the Corona dump was happening, everything was sort of correlated during all of this. And then as we were going up, we started to lose correlation. So we'll see if this longer term trading range continues here. You can see if we continue daily consolidation, then we'll likely end up in sort of a weekly equilibrium, or maybe we'll just go straight up to all-time highs. So keep reading the tape, guys. The tape is your best friend in these markets. I wish you all the best today. Enjoy your day. Hope you enjoyed the video. Leave a thumbs up, subscribe to the channel. Take care. Bye.